what's your take on cryptocurrency?
Love it.
Love it.
Yeah. Now here's the thing. Full disclosure. Tried to purchase 3 times. Every time I tried to purchase, there's been an issue with Coinbase or an issue with a broker or the exchange or something like that. I actually have a cryptocurrency expert on my team who is doing an ICO on a major platform. We're looking at doing some cool things in a Tulsa fund for owning warehouses that mine cryptocurrency. Like, I'm all into it. I get it. I get the mining. I get the hodling. I get it. I myself have not owned any yet, but I've tried. My fiance actually just tried this past weekend to get us some more, but we keep getting blocked somehow. I don't know what's going on, but I think that it is the peer-to-peer currency, I think, is the wave.
Yeah, I don't touch it.
You don't touch it?
I don't touch it.
Okay.
I own $10. I bought $10 worth just to see the process.
I thought you don't do investments unless they're big chunks.
Well, no, I mean $10. That's not an investment. That's coffee. You know what I'm saying? You can't say $10 is an investment.
So how'd your $10 do so far?
I think it's worth about $7 now.
Okay.
I bought in November, when it was kind of starting to get to its height, and then it crashed, just like I thought it would.
Right.
And I've been predicting this whole kind of thing for a while. The problem with cryptocurrency is that it's not actually based on a particular value structure like a stock in a company. You see what I'm saying? So it's really just based on what a person wants to buy and sell it for.
Yeah, it's just confidence, just consumer confidence.
It's just confidence.
That's it.
Now you could say that the dollar is based on consumer confidence as well, but you actually have the United States of America and all the companies within the United States of America and the military force protecting the United States of America.
That's really what's doing it, is the military force would make the dollar valuable.
Exactly. Now, if Bitcoin had a military force, I might actually invest in it. But,
right.
It's one of those things where it's a very dangerous vehicle because, and the reason why I always tell people who follow Vlad stocks not to touch it is because it's one of those things where you could very quickly lose the majority of your investment overnight.
That's been my big concern while I walked into it slow. It's that if somehow some code gets cracked or something happens where you can just lose it all, there's nobody you can complain. It's not regulated. There's nothing you can do. You're just
you're just asked out.
Yeah, you're definitely asked out.
If you buy a house, that house will be worth pretty much the same thing tomorrow.
Or one day. If it loses value this year, in a few years it'll recover, or someday it'll recover.
But what I'm saying is today's Thursday. On Friday, that house will be worth damn near the same amount.
Correct.
Whereas if you have a Bitcoin, that Bitcoin could be worth half as much the next day.
I mean, same with stock, though. You can buy stock today, and it could be half tomorrow. I mean, a major scandal happens in the company, something goes public, and that stock can drop the same way.
You'd be hard-pressed for a company the size of Amazon or Apple to drop in half the value in one day. You'd be very hard-pressed. You've never really seen it. Now, you've seen an occasionally a situation like a WorldCom where it was found out that the numbers were all fake and so forth. That could potentially happen.
Right. It has happened.
It has happened once in so 1 out of a million, you have that type of situation. When a company is public, it's pretty well regulated. So it could happen with the wrong company. But if you have an S&P 500 index fund, the chances of that dropping 50% is essentially non-existent. But with a Bitcoin, it could drop. It's a dangerous vehicle. I mean, and the thing is, the reason why I tell people not to fuck with it is because if you bought a bunch of Bitcoin in November, in December, when it was at 19,000, now it's at 7.
It's back at 7? Jeez.
It's at 7,000.
I was looking at when it was 8, and then I was mad I didn't get it when it went up to 17.
Yeah, it's at 7.
Gotcha.
Hold on, I can tell you exactly what it is.
I mean, I know folks that got in early when it was like in the hundreds.
Yeah, I mean, if you have a time machine, then you could really cash out with that right now.
Right.
Right. It's at $7,600 right now.
But could it not be worth $23,000 by the end of the year or next year?
It could be worth $100,000 by the end of the year. It could be worth $1 million by the end of the year.
I mean, that's no reward, no risk is taken.
Exactly. It could also be worth $500 by the end of the year.
It could.
There's nothing that's actually holding it up. There's no actual value that's holding it up.
I mean, I think that comes back to the sound investment principles for anyone is don't invest more than you can afford to lose.
Yeah, I'm not really into that can't afford to lose mentality, because once you start thinking like that, then you're going to end up doing things to lose it. You see what I'm saying? Like, I only invest in companies that I'm expecting to gain from.
Gotcha.
If there's any amount of, well, I can afford to lose this 100,000,
it's risky.
Then that's some shit that I'm not fucking with. And you also really kind of have to understand, like, you know, me and DJ Paul were talking about this recently, is that, and I think that this is really important with young investors and investors without a lot of money, you know, starting off with, is that it takes a very, very different skill set to manage successfully different tiers of money. Mm-hmm. If you have $100 and that's your total investment and you lose it, okay, whatever. Not a huge deal. If you have 10,000, you're going to treat it with a different amount of care.
Right.
If you have 100,000, you are now looking at it very, very differently. When you're playing with millions of dollars,
it means a lot.
You're not saying, okay, I got 10 million. Let me put $1 million because I could afford to lose this. You lose $1 million, you lose $1 million. You know, 10% of your portfolio when it's $1 million is very different than having $1,000 portfolio and losing $100.
Correct.
So you approach things very differently once you get into different tiers of money. And I think, and this is why the top money managers are so good, because they're playing with hundreds of millions, if not billions of dollars.
Well, the reason why you're able to do that, though, is because you can make so much off so little when you have so much money, right? So if you're only making 4% return, but you're working with billions, you're still making millions of dollars. But if you're only making a 4% return and you only got 1,000, it don't mean as much. So it goes both ways, right? So like
it goes both ways.
Yeah. So the wealthier, you know, more capital heavy investor or investment firm can play the game of, hey, I'm only going to invest in great companies that do well, who are going to make me a smaller dividend, and there's less risk. But I can take less risk and be, you know, that risk averse because I have so much money that's going to pay me back enough to sustain my life and build wealth and build legacy anyway. Someone who's trying to come up from the mud, they got to take a little more risk with their 1,000 to get it up to that 100,000.
Yeah, but as you take more risk, I mean, here's what happens psychologically, right? And I've seen it happen to myself, and I see it happen to a lot of other people. When you get into investing, right, you want to see quick returns. Mm-hmm. So you do riskier stuff. And when you get hit really hard, when you lose 25% of your investment, 50% of your investment, you start to feel like investing in general is a scam, and you just step away from it for years, if not forever. So this is why I always discourage people from taking risky investments, especially in the beginning, because it's like, you're going to fuck it up, and then you're going to not touch it, and that's going to be the real tragedy, because you're going to go through life without investing, and then you're going to essentially stay where you are financially.
Well, I think it's about what kind of mentorship you have as well, right? Like if you were groomed and you were taught and you understood these principles going in, and you were a mature investor, understanding that, hey, if I lose, it's all part of the cycle, it's part of the game, then you could take it better. It's like people in real estate. There's a lot of people that got into real estate when it was all hot and bought their house and the foreclosure market happened, and they're like, oh, I'm not messing with that. But it's because they didn't know any better, where if you had a little more knowledge base and strategy base, you'd be like, okay, that's part of the cycle. Here's where I can recover. It still makes sense, right? And so anything, it's like dating, right? You could date one person, fall in love, they screw you, and now you never want to date again, right? You don't want to fall in love again. So, because your first experience. But as you get more mature and get some kind of mentorship and guidance, you see that that's just how the world goes. But there's still good women out there. There's still good investments out there. There's still good real estate out there, no matter how your first cycle may have been.